the fucking TikToks have been hitting 60 and 70, man. So definitely be in there. But don't forget about the YouTubes either. There was like 30 max, you know. So there's a good 100 people every day between the YouTube and the TikTok. Every day. Hey, Matt Gongaleski, how are you? And Griffin Evans. What were you talking about before? You said, I am Evan or something? I don't know what you were talking about. Like, what was that joke? I know it's not funny when you explain it, but what were you talking about? Oh, it did. Oh. All right, well, let's start focusing on this. Hey, it's Ryan. Wow, I haven't seen you for a while. Sakari. Oh, cool. Welcome. All right, going live. Pulling up SPY. Not starting with GameStop. Cool, man. Thank you, Sergio. You know, I'm just waiting for the day in which either that fades for you or not, you know. Like how long will it take for you to finally go, oh, he is mortal? Sergio says never. All right, guys. So today was a great day on the market for us. We shorted SPY about 5 times, got 59% on one of the tries. Thousands and thousands and thousands of dollars we made today. But let's just take a look at the market. Like, what the hell is going on? So if you're new, you may not have been in class like yesterday or the day before. The last couple of nights I've been explaining that this is really a rotation. And that if you look at financial stocks, industrials, and what am I forgetting in there? Let me pull up the FinViz. Let's look at the whole grid here. Energy, financial, industrials, energy. And then outside of those stock sectors, like business sectors, you also have commodities, and commodities also doing incredibly well. And credit. So that's over in finance. Today, a lot of things got clobbered, but, you know, it's a bit of a trick to that because, you know, in case you're new to the stock market, sometimes things go down. And it doesn't have to be, I'm not saying like on a day like this where it's a crash type feeling, right? But what I'm saying is that yesterday, the market went down, but banks went up and energy went up. And industrials went up. Today, the market went down, but banks went down. Industrials went down. Energy went up. But what I'm saying is, as far as the banks and the industrials, so what? It doesn't mean anything yet. You know what I'm saying? Just because today industrials went down with the market doesn't necessarily mean that the industrials are doing bad, because they went up the day before. And in case you don't know, stocks do go up and down and up and down and up and down. But in general, you know, these industrials, the banks, healthcare, insurance, credit, lending, real estate, commodities, energy, industrials, and consumer staples are doing just fine. And so what does that mean? So I've been saying it for a couple of days now. It means that while interest rates are rising, yield rates are rising, and the cost to get lent money is now becoming more expensive, that's burdening businesses. And so therefore, institutional hedge funds, institutional investors, you know, the big money, are taking their money out of those businesses because it's only going to get worse. Because, like, you know, interest rates are good right now, but they're going up. They went up like 50% in the last few months. Like, that's a lot. So that really eats into the profit margins of businesses. And so businesses are suffering hard. So big, huge growth companies, which had nice, wide open mouths with their profit margins, now, oh shit, they really have to, they can no longer get away with being egregiously, growth companies. They're basically going to have to turn into value companies. They're going to, batten down the hatches. Otherwise, they're not going to be able to afford those kinds of profit margins anymore. They're not going to grow. And so those growth companies are going to grow less fast. Let's put it that way. And then some of them may actually just flatten out. You might see Tesla and Apple flatten out for the next 3 years, maybe the next year. You may just see these things. First, they're going to correct for a while, and then they'll just chop sideways forever. And then so then the next question is, so if that's the case and they're pulling money out of businesses because businesses aren't going to do well, why would they do that? Because they can go put it into the ones that are lending the businesses money. They can go put it into the credit companies. They can put it into insurance companies. Everyone who benefits by being able to lend you money at higher interest rates and make more money with higher interest rates, that's now the good bet. And that's different. That's not like something that's going on for the next month or the next, kind of like quarter or year. This is a new 40-year cycle we've just entered. It's called the fourth turning. And we've just, we went through this from 1940 to 1980, what we're just now entering. And from 1980 until now, 2020, another 40 years, we had declining interest rates. And so that caused businesses to thrive and thrive. Growth companies were so unfettered and so easy to get money and build your products out and become a huge success. Well, now that's a problem. So that's where the money's going. So you're actually seeing, it's called rotation. That's what's going on. This is a big rotation. It's kind of a historic event. It happens every 80 years. So, the next time you're going to see something like this is in the year 2100, 2101. Are you going to be there? Be there or be square. No, this is the reason why no one, unless you've studied this stuff, you won't know how to grasp and how to feel the new texture of things. Everything about the next 40 years is going to be 180 degrees different. It's going to be an inflationary period for 40 years. And at the same time, we're moving everything over to blockchain and crypto, and we may be getting rid of the US dollar. I mean, there's some rapid changes going on right now. So everything you think about what you think is a good stock is just fucked. Like, you need to hear that like a slap in the face. That's why I use that word right there. So, what you think is a good investment probably needs to be retweaked, because now banks are a good investment and businesses are not. Businesses are the risk now. So somebody asked, does this kind of thing affect short-term swings in 3 months or less? It absolutely affects it. You understand, the moment the investors in the hedge funds started to see interest rates rising for the first time in like forever, they understood right away, whoa, this is the beginning of a new era. And so you're asking me, does this affect short-term swings of 3 months or less? It affects tomorrow. I mean, it's over with, man. Like, they're going to start just wringing all their money out of everything that was a business and keeping it in some things that are like consumer staples, stuff that you always have to buy. Like I always use the example, consumer staples is like toilet paper, cereal. These are the things that, you can't do without, right? They're called consumer staples. The things that are consumer cyclicals, those are like luxury items, that new big, huge TV, right? In the future, that's not going to be the kind of economic environment that we're going to be in. You're going to be having trouble paying your bills in the next 5 to 10 years. And Yeah, I mean, Sergio, yeah, you're almost too late, but you probably can, if you can work hard on it, you can probably beat the curve a little bit by a year or two. And in 2 years, maybe you can amass enough money to where now you can be a person with money. Because basically the people who are going to thrive in the coming environment are people with money because they're going to be able to lend it. The money is going to be really valuable. Having wealth is going to be really valuable in the coming next 40 years. And it's so ironic, like I said, the last 2 nights, it's so ironic because the whole socialist idea is that they want to make sure that everyone, can get more for less, so more easily, more equally, and with less effort and with more generosity. And unfortunately, by going that way, they've basically triggered inflationary times. And that's going to actually make it so that anyone with money is now going to be able to be the big boss, and everyone else is going to have to suffer through a lot of inflation in order to combat that. It's a feedback loop that's going to start to happen, and it just kicked in. It basically just kicked in like 7 sessions ago, meaning 7 trading days ago. Pretty historic moment. So how did they trigger it? Your portfolio is fucked. Somebody says. Yeah, a recap. Can I get a quick recap? Oh, Faraz says, sorry, I'm late. Wow, what's going on? Can I get a quick recap? And Ryan says, your portfolio is fucked. That's great. Anyway, for those of you with $12 in your trading account, you're not going to give a fuck about this either way, but I don't give a fuck about you either. So, who cares? I'm trying to talk to anybody who's actually trying to make some money here with some actual money. Maybe you have $5,000 in an account. Maybe you have $20,000 in an account. So I know that, those of you who are not mature enough yet and don't have a large enough amount of savings aren't going to give a fuck. But the fact is that this is what we have in front of us. And if you could be smart, like if I could just talk some sense into these people with $25 in their accounts, somebody says my $3,000 is offended. Maybe 1 out of 20 of you who, is only dabbling in this and like got in this because of the Wall Street bets and whatever. And now you've swam over into my stream and I thank you for being here. But if I can just talk some sense into you to say, batten down the hatches, save, make money now, however you can, get a job, save, invest that into safer assets. And then now don't put it into Apple. Don't put it into Tesla. Don't put it into high octane growth companies like Netflix. Forget it. Like Netflix is going to really get hurt. All those digital companies with big profit margins, trying to do huge expansion and growth are going to be really suffering. So instead, what do you want to get? You want to get like United Health. You want to get MetLife. That's an insurance company. You want to get, what's the one with the duck? Aflac. Yeah, Aflac. And you want to get energy companies like ExxonMobil. You also want to get commodities. So you can check out some ETFs like DBA, that's agriculture. Because the prices in inflationary time, the prices of basic things go up, like even just soybeans and sugar and corn, just your basic commodities. Those prices go up. They're likely to go up an astronomical amount, like you wouldn't even believe. Like it's almost ridiculous to hear it sometimes. But like gas in 8 or 10 years, maybe like $12 a gallon. Cereal might be $15 a box. And it's not even going to phase, the new kids of that time, because that's going to be the prices and they're just used to it, and we'll be the people who remember, like people from 1940, when 1980 was there, they're telling you, I remember when bread was 5 cents, that's going to be you. I remember when gas was $3 a gallon, and now it's $12 a gallon. Somebody already said, I remember when gas used to be a quarter. Yeah. So it's weird. It's not something you're going to be accustomed to. It's not something that any of us up to this point have been trained in. And pretty much no one's experienced unless you lived from 1940, unless you were born in, say, 1920 minimum or earlier. So you were 20 years old when 1940 hit, and then you experienced all the way to 1980, but that would make you 101 years old right now. So that's what I'm saying. It's a very interesting thing. And that's part of actually kind of how it works, is that people get hoodwinked, and the generations forget. And that's why it's a cycle that keeps going around and around. And it's the four generational cycles of 20 years each, which is good times create weak people, and weak people now create bad times, and bad times create strong people, and strong people create good times. And then that cycle continues and continues. 80 years. There's books written about it, macroeconomics. So be careful moving forward right now. Everything is shifting. It's just shifting. The reason why the S&P 500 or QQQs or all these are falling is because they're the leading components that make up those indexes by a huge, like Apple is like a large, I think it's like a 10% chunk of it. Those are the ones that are actually going to be correcting now. And, I see Apple $105 easily within a month. Easily $105. Could happen in like 4 days. What's up? You got some tea? Oh, thank you. Everyone, my wife's hand. All right. Thank you, dear. Oh, wow. There's actual steam coming out of it. I don't know if you can see that. Probably not. Wow. So I'm going to probably have to let that cool down for a minute. By the way, you can follow her. She's Kathy from Honduras on TikTok and on, fucking everywhere. Instagram, on YouTube, on Twitter, and Pinterest. God, she's got accounts everywhere. And so anyway, you can follow her if you maybe are, Spanish, and most of her stuff is in Spanish. I like the Latinas. Raymond says, knowledge is power, and I appreciate you sharing how you apply it. All right. So anyway, you guys probably want a little bit of a forecast. And what I can tell you is that in the first parts of this kind of a correction, and this is really just a massive rotation and a changing and a turning, the fourth turning, a changing of the guard, really. The old guard no longer going to be doing good. The new guard going to be doing good. You want to put your money into all those other places I told you about. But what's the prediction then? Like, what's tomorrow going to be like? Evan, what's tomorrow going to be like? What about next week? All I can tell you is that the reason why they're getting out of those other stocks is because they're no good anymore. You can make more money on the other ones. Now, that's not true from necessarily a swing trading perspective, okay? So if you were in something for 3 months, and you really wanted to make some money on it, one of the smartest things you could have done was sold at the top like 2 weeks ago and then just held in cash while this market got all freaked out on you and tried to figure it out, like what's going on. Because, yeah, things are still going to zigzag. Swing traders and day traders are still going to be able to make money. Day trading and swing trading, the zigzags, right? But right now we're feeling the strongest drop, right? It's like a day after day after day. We had 3 red days in a row. It doesn't have to necessarily continue, but it can still be in a downtrend. So for me to tell you tomorrow is another red day, I could be completely wrong. Tomorrow could be green day, because it can go up we can go backwards 2 days and still be 3 days down in the red. You see what I mean? We can go backward 3 days. We can walk, the market makers can give you hope. They can walk you back. Tomorrow, they could do this. They could bring the markets back up, 1 or 2 steps, and then they can push it down 3 more red days next week. And that's progress. You know, it's 1, 2, 3, and then 1, 2 up, and then 1, 2, 3 down, and that's 4, right? So they got 4 on you, and they tricked you, and they got you into invest your money for a 1 month swing trade when it started to go up, and then they tracked you to start to come down, and it went even lower, and then you said, God damn it, and you get out and you sell, and now you are without your money and they have it. And that's what can go on. So like right now, I can't necessarily give you a perfect outlook on what tomorrow is going to be, but it could definitely be sore and red. And if it is green, you should probably only day trade it. Anytime the VIX is above 25, and it's now, I think it's at like 30. Let's take a quick look at the VIX. Anytime it's above 30, don't hold any equity positions overnight. The VIX hit 32 today, but it closed at about 29. That's very high. That's not good. And it looks to be like it's going to go higher the way some of the indicators are showing here. So be careful out there. Don't be holding things that you used to believe were great. Right now, that's completely changing. The landscape is completely shifting underneath your feet. It's like this. It's so much 180 degrees different. It's like what you used to consider the safe place living is land. For the next 40 years, it's going to be the sea. It's like water world. It's just, you better freaking adapt. It's going to be all that stuff's going underwater. The new world is this other set of assets that you need to be in. So that's energy again, real estate, industrials. So I'm just going to name one key stock that's inside of each of those. So energy. What did we trade today? It was pretty damn good. FANG was a very good one. Or ExxonMobil. Okay. And then real estate. I'll have to take a look, but check out real estate. But you could get like an ETF on that, and that would do well. I think VNQ. In insurance, I already gave you 3. United Health, so UNH, MetLife, MET, Aflac, AFL. Industrials, GE, Caterpillar. The price that farmers are going to get for their for the stuff that they make, for the the products, the foods and the stuff that they grow, is going to be so much higher over the next coming years. And so obviously Caterpillar is going to be able to raise their prices a little bit, maybe put a little extra features in. The farmers are going to be buying the next tractors, right? So Caterpillar is going to be doing real well in this inflationary time. And so is G. All the industrials are going to be heavily needed and are going to benefit from inflation. And and energy is going to go up now. And then commodities. So you might bet on silver also, but things like DBA, agriculture, DBB, base metals, DBE, energy would be a good way. Let's say you wanted to play oil, or just the cost of just energy going up, natural gas, oil, and the likes. DBE, that's a good ETF for that. And then over in like credit, you want to like get some of the credit stuff. So Lending Pro, L Pro, Rocket Mortgage, that's kind of the future of mortgages, RKT, Zillow, Z. Who can think of any other ones in all these different places? One person said gold. Gold appears to be in a downtrend. So gold does not seem to be where people are putting their money. See, interest rates are rising. The only time you would want to go to gold was when nothing was working. Gold is called a safe haven asset. And the only reason you would pour into gold is when you couldn't go anywhere. You're like a goose running with your head, chicken running around with your head cut off. You're like, oh man, interest rates aren't going up. They're going down. Oh shit. Businesses are getting clobbered. Oh God, where do I go? You got to park your money in gold. You just do it because at least it's safe. It's considered a safe haven asset. So all money starts funneling into gold. The demand brings up the price. But that's not the case now, because interest rates are rising, and that's creating wonderful things for commodities. Corn, is in commodities. Industrials, for lenders, for banks, for real estate, for energy, and for I think you got it. You get it, right? Oh, somebody was saying something about ARCs, and yeah, we got rid of the ARCs. Yeah, I think we sold ARCF today, or I think we cut ARCF today, Lyle. All right, so yeah, and the VIX not looking good today. We traded UWMC right at the open. I believe that was the one that we did really well on at the beginning of the market. So let's take a quick look at that. Is there some reason why it doesn't want to move? Okay. Yeah, and it is true for us. Yeah, and it's, you know, sad because that's what they voted for. That's what they want. But, you know, it's not going to work. I mean, it always ends up like Venezuela. All right, here we go. So literally off the open, we took UWMC and got from 10, I think it was UWMC, but there might have been another one that was similarly set up. And anyway, we got it right around when it broke a pre-market high of 10.13. I think that is correct, 10.13. I remember us getting in right there and rode it all the way up to 10.99. Yeah. So that was super all in. Momentum high frequency trade breakout trade. And we did really well on that. That's about a 10% gain. So that's on your whole account. I did not do that. See, this thing is acting a little bit weird. Then we took, and let me look up my recap here so I can be sure. Here it is. FANG and CPE. So on the premise, I'm from Venezuela, and it's not, and I thought he was literally going to say, and it's not that bad. Come on. No, he says it's bad. It's bad. Are you, because are you here now, Daniel Garcia? Where are you? You're not in Venezuela on my broadcast, are you? That'd be fucking awesome. Which indicator? So anyway, we knew, so I'm going to pull up FANG. We knew that energy was the hottest sector right now, right? Because of this shift. Right now it happens to be energy. So we literally just decided to harpoon energy this morning. And we did really well on FANG. We got 70% gains. I swear to God, this thing keeps moving around on me. We got 70% gains on FANG. Look at that, just beautiful green appreciation right there. From about, where did we take it? I think it might have been right down here, 72.50. Potentially all the way up, because I believe we were following the 5-minute candles. I don't know how we stayed in that long, but we did really well. GME, yeah, we will talk about GME in a minute as well. And then FANG, and then we went in CPE. That was another one. Oh, you know how we traded? I'll show you here on CPE once it pulls it up. I guess it's literally like still pulling data. Oh, that tea's good. Tea is good. All right. That was not the day, was it? Yeah, no. Okay. We had a flat top wedge pattern breakout, but I'm not even seeing it on the chart here. That must have been more apparent. Okay, look, let's take a look at XLE. I'm sure it was much more apparent on XLE. Cinnamon tea is where it's at. Literally, that's what she made me, like with actual cinnamon. She does it with some cinnamon and ginger on the stove. Yeah, like it's not the tea bag deal in my house. Actually, it is sometimes, but oh, there might be still some drawings left on there. There we go. So this is going to be real apparent. Let's see if we can get it to show the green and the red first. Give it a second. There we go. All right. So across the energy sector, I started to notice that a flat top wedge pattern was forming. What is it doing there? Let me see if I pull up maybe the 10-minute candles if it's a little smoother. Oh, there we go. There we go. There we go. No, because that's the day before. This thing just sink or swim is just being a real problem tonight. Okay, let me pull up my annotator here. Flat top wedge. So on some of the other stocks in the XLE sector, I could see that a flat top wedge was forming, and essentially what you have here then, therefore, is a top, and you had an appreciating lower baseline like that. And then when that breaks, that's bullish when that happens. And the market, I believe, happened to be going up during that time. So that was a really good thing because we had the wind at our back in that case. And even if the market went down, it looked like energy was going to hold because the whole rotation thing. It seems like the more money they take out of one side, the more money goes into the other side anyway. It's called money flow. So anyway, when price breaks the flat top wedge, you can expect for it to move the distance just like that from there to there over here. And that's pretty much what we got right there. So that was our price target. And we got 70% out of FANG and 55% out of CPE on that. Somebody says my microphone sounds pretty weird. Is that true, guys? Let me see over on the YouTube. I don't know. If anyone wants to let me know if the microphone sounds bad, just let me know. The Zoom is getting my microphone feed. How's my microphone? Dude, Ryan, thanks for remembering that. I don't think my mom did get out of Apple. I've been telling her, I literally wrote, I'm going to read you the email I sent her. And I think I sent it today. I hope you learned how to sell in the last 40 years of market investing. That's what I said. We have a pretty good relationship. And then at the very bottom, I said, Apple going to $105. That's literally an email I just read you verbatim, word for word. How many trades did we make today, guys? And then we took SPY down. So let me show you that. So those were our positive, our long trades is what that's called. And what I want to show you also is that once this break happened, it started to chop and then break down. It no longer presented any further breakout trades like that last one. So we knew to just let it fall down and maybe get held by support by the last line. But at that time, the market was just taking too much and it took energy down a little bit with it. Not too much though, as you can see. I don't know that it's bottoming at 105, but I know it's going to hit 105. And maybe it goes lower. I don't think so. I don't think it really should. Basically, it's just got to wring out all of the extra, the calculations. Everything gets recalculated now. So that's what happens is everything gets recalculated now. In other words, okay, interest rates are such and such, and analysts say, and okay, in the future, for the next 5-10 years, therefore, we can expect Apple to go up at this rate. Therefore, I'm not selling you that goose that lays the golden egg for the price of just one damn egg. I'm going to give it to you for the whole price of what you're going to get out of Apple if you buy it from me. So they do it's called discounted cash flow analysis, and they can figure out backward 10 years. What is Apple worth? And that's called the PE ratio, kind of gives you that. And if your PE ratio is like 30, or in Tesla's case, 600, or whatever it is, that tells you how many years out they're calculating or you're paying for the golden goose, right? Let's just say. And now what they're doing is they're recalculating everything across the board, across the entire stock market and going, oh shit, actually now we're gonna have rising interest rates. And over the next 10 or 20 years, you know, interest rates are going to hit 6, 7, 8, 9, 10, 11, 12, 13, 14%. Eventually, it's going to get terrible in like 20 or 30 or 40 years. And therefore, these businesses in 10 years are going to have a lot of trouble, and it's going to hit their bottom line like this much, like, you know, it's going to be a real problem to turn a profit. They may even become unprofitable for decades. And so therefore now on a discounted cash flow basis, working backwards, I believe Apple's now worth $76 or something. You're going to start to see analysts downgrading across the board over the next months and years. And all these stocks are, you know, I mean, the best of them, the most innovative of them might still be going up, but at a slower rate over the next years. But the most of the rest of them are likely to go sideways, if not even down for a long time. They're just going to batten the hatches and go into survival mode for decades. But, you know, in the short term, you got zigzag. So you have a lot of things you can play with. But please don't think well of any of those companies anymore, because you could get yourself into a trap. Be careful. All right, so then we turned to SPY and took 5 or 6 market drops on that. Yes. Somebody says, is this Biden's fault? Not really. It's the people's fault. You know, basically everyone wanted socialism. They voted it in. They got who they wanted to be up there to do it for them. And that it's just normal, though. You know, that's what I was just talking about. You know, good times create weak people, weak-minded people. And so that's what's happening. And the weak-minded people now want to run the show with their ideas. But unfortunately, their ideas are going to create bad times. And then, but the good thing is that those bad times in the future, in about 20 years, children will be born in an era that's really tough, and they're going to be scrappers, and they're going to really learn how to become successful and innovative and beat the system. And they're going to create the new era for us starting in 2061. So anyway, it is politics and economics and evolution. They all mix together. They're all based on each other, and everything really is economics, including physics. Even physics is economics. It's a loss and gain of energy, or the transference of energies, transactions of energies, if you want to call it that. But again, let's not go there like we did the other night for a long time on this parallels. Let's take a look at the SPY drop that we took today. The SPY drops that we took today. So yeah, the market was pretty hard at a certain point, but we were ready, and we caught it this time. And some of you were asking me, should we get puts on SPY when it started to crack this pivot right here? You could have, you know, but you couldn't have known that it was going to create a panic drop. Because up until then, I mean, wouldn't you say that things were pretty tame? You know, although you could see the volume start to rise there a little bit, starting right about there. It looks like it's about to do that weird movement thing again on my screen, and I'm about to draw. Okay, it's getting a little bit weird. Thinkorswim is acting strange with the CPU probably. Let me just let it breathe for a second, and then I'm going to draw the different SPY drops we took. Come on, don't be so strange. Look at that. The screen's getting so weird. You see that? Everybody probably sees that. What do you want me to do, man? You want me to zoom? There we go. Okay. Is that what you want me to do? Fine, I'll do it. All right. So how do we know? Like, how do we know, you know, when these points are going to happen? Well, they're completely freaking obvious if you just know what to look for. So check this out. So the low of the day was over here. Okay, we know that. And I'm talking about over here. I'm not trying to direct your attention to the other side quite yet. And then we have, oh yes, euphoria. We broke a new high, right? So if you're breaking new highs, and then, whoa, we did it again. We broke another new high. And then we had this huge drop. And I believe that may have been related to Powell's remarks Powell's remarks, we had this huge drop. Things started to get a little bit worrisome, but people are saying, "Oh yeah, but it can't get that bad, can it?" Right? And then market comes right back up. See, I told you, it's not really that bad. And then it comes down again, and it breaks the pivot low of when they were saying it can't really get that bad. That doesn't feel good. And that's when everyone started asking me, should we get puts on SPY? Should we get puts on SPY? And it was like, yes, you could try to gamble that because you couldn't be sure though. Like maybe it would go down a little, maybe it would do this kind of a thing, right? You can't be sure at that point. But when we can be sure, oops, let me go back one more. Is when it broke the low of the day, because an uptrend requires, if the market is in an uptrend, it's going to require creating a higher low. So in other words, right here, people were like, see, I told you the market's doing good. That's it. That's the lowest low. It's a higher low. So the market is now doing, let me see if I can draw this a little bit better. So it's almost like what we have on the market here. So look at like above, and I'm going to draw it down below. But I'm going to draw only the key pivot points. Okay, now for a trend to be an uptrend, and this came down from the low, so that's all right. For an uptrend to be an uptrend, this puppy needs to put in a higher low. This is a higher high, and this is a low. It's an established low, established high. There we go. Like if it can do that and come around and continue to break above this high, that's a fully confirmed uptrend. Like we're in happy land. Yeah, it zigzags. It zigzags. It's always zigzags. But it's an uptrend. And we can confirm it. And we know it. And the advanced traders and the smart money go, oh, okay, great. Excellent. We are in an uptrend. So what happens, what do you think happens when price breaks the low of the day? Right here, right? This point now becomes pivotal. And that's why the SPY panic play works. Especially in a situation like this, where we put a 3-point uptrend hope into people's minds. And we almost made it. Like right here, this was like, oh yeah, please go all the way back up. And we can have a fully confirmed uptrend. Excellent. However, once that price was broken, right there, that was the defining moment. And that's when we got puts. And we had all our orders ready to go. And you can see what the volume was like at that moment. That's just like a full red bar. That's the almost only full red bar on the whole chart. By the way, that's an indicator that I custom programmed. I'll be selling it in the next week. I'll set it up on our website. So anyway, so we grabbed it right there. And this is the move that we got. I'll draw it in green because it was money. So we got this first move, and then we pulled out. So that was move number one. And then it broke a new low here, and we got down to here, started to chop and pull up. Some of us were able to get out. I don't know if you can see that very good. I'll try drawing it a little bit different. And then the next one to break is where? Right here. Right? That's the previous pivot low. As it comes up like this, it leaves behind a little bit of a signal point for you. And that's the pivot low. And on that one, we were able to get $3 of drop out of SPY, which is highly unusual. That was an excellent trade. That was our 59% gain trade. Thousands of dollars you make on that with 10 or 20 contracts, 10 or 20 put contracts. Dave Portney bought 500 shares of Amazon accidentally. Oh shit, that's hilarious. And then that was it. That was it. You know, we hoped maybe it would go down further, but that was it. We had 1, 2, 3 trades, and there might have been one in there where we thought, oh, this is the moment, and it just didn't work out. Could have been right here, and maybe it pulled against you, and you lost, 4%. It's nothing like gaining 59%. Love these classes, man. Thank you. You're welcome, Lewis. What was one of your puts? So when you make these plays, I mean, the reason why you're probably asking that is because you want to learn how to do this too. So you're like, okay, which one did you buy? And what you got to do? Give me the whole thing. I have a class, and in that course, I have a course, and in that course, and it's very cheap. Okay, so just go there, check it out, and if it's not cheap enough for you, let me know, and I don't know, I'll call you an asshole. So just go there over to marketmastery.teachable.com. And over there, I actually teach you how to do this exact play. This is like a play. It's a play that you use whenever the SPY is dropping, typically like 10 to 20 times per year. And you make money on when things are going down. And if you have any assets or equities going down, you make a ton of money. Playing these put drops, you make thousands of dollars to recompensate for the drops in your portfolios. But again, the course is over at marketmastery.teachable.com. Okay. And if you just click through the link in my bio, you'll join our Discord that way. And we have a channel in there called Chart Trader Resources or Chart Trader Links or something. And you can just find it there if you don't want to remember. marketmastery.teachable.com. And you can learn how to do that. I teach it, and there's multiple lessons on how to do that. Cool, Lyle. Awesome, man. I like it. I like it. If you have any questions, you let me know, okay? All right. All right. So now let's go take a look at anything that you guys think might be a worthwhile or that you're in and you don't know what to do with. And you want me to give you any advice, I understand. So Zillow trade or a swing back to at the money good industry? I'm not sure if that's a question, Matthew. I don't quite understand. Elite Gamer says, thanks for sharing your knowledge. Do you think it would be worth taking the loss and getting out of positions like CBAT, OCGN, ONTX, FCEL, etc.? I was up good and I woke up to all my profits vanished. Why not just go ahead and sell everything? Why not just wait it out until it's like a euphoric nirvana time again? Why subject your money to such risk and such gamble when you can just take a pause? You can just pause. You can just give it. And that's what's happening. And everyone's realizing it more and more and more, you know? So yeah, that's my advice for you on that is, you know, it probably makes sense for you to just, yes, get rid of everything. Do you think mortgage REITs will be a good investment in this inflationary period? They ought to be, but real estate is a complicated, multi-dynamic, multi-force type of sector. You know, see if you can read some articles on REITs that should perform well in inflationary times or something like that, right? And it should have been written within the last 2 months maximum, you know, and see what you can find out about that. That's what I could tell you about that, Adam. Mental outlaw. I love that. Oh man, what is that? Oh, is that it's a spammer. Oh, that's funny. Okay. Spamming about a missing person, which has got to be the latest scam from Nigeria. Trying to find your site. Can you put a link up to it? Yeah. Which one? So Market Mastery with a Y dot teachable.com. And the person's like, you know, I don't want to admit it, but I'm illiterate. So could you just write it out so I can just click on it? Oh, somebody else in the group typed it. And thank you, Sandra. But, you know, if I could type easily in there, I would. Let me see. Cool. I like that you guys are using the question feature. So are you saying investing in banks is the best? Kind of, yeah. It's one of the best. You know, you want to diversify. There's like 5 to 8 different areas where you want to start putting your money now. And that's, you know, financials, insurance, banks, lending, mortgages, credit, and then energy, commodities, real estate. You know, we went over it. I don't want to get too into it, but banks is one of them. Yes. Could you look at FTM for crypto? You know, I don't think I can pull that up. Not because I don't want to, but because I don't think Thinkorswim lets me. All right. Oh, yeah. Let's go over GME. So that was very interesting. So yesterday, I believe, I identified squeeze was about to happen on GME. So I said today, everybody dive into GME. In fact, I think last night in class, or maybe it was like at midnight, I wrote the group, said everybody pile into GME because I do believe it's going to have a squeeze breakout. So let's take a look at that. Like, why did I think that? We'll pull that up. And I know I'm probably going to need to see the, maybe 15-minute candles over the course of 30 days. So let's pull that up. Okay. All right. Let's see. Can I get it zoomed out to show even the previous days? No, I won't compact it because the minute candles are too small. All right, hang on. Let me change this to a 30-minute candles. 30-minute candles. That should work. All right, so here we have when GME went, you know, fucking supernova, right? And those out of the money calls got you 400. Nice. Oh man, excellent. Yeah, post that to the testimonial. I'd love to read that later tonight when I'm sitting around. So what I saw was the following, and I hope you can see these lines I'm about to draw, but you can roughly definitely see the shape of the stock there, I'm pretty sure. You may not be able to see this detail, so I'm going to do it 2 times, one on this macro view and then one a little bit more close up. And I guess I'll use hot pink and really thick so you can really see this. So we had this wedge forming underneath GME, just like that, right? Hopefully you can see that. Kind of hard to see. All right, which is bullish, frankly, and because it has a lot more incline on the bottom part of the wedge than the top part of the wedge. And when these things break out like that, they have a potential to run up to previous high points. So that would be here, 180. And then there's a little blip there at 190 and 200. And then if somehow they're able to break that, they'll hit previous resistance points, which are about 220. And then possibly it could get all the way up to 250. I don't really believe in those numbers, 250 and 220, but it's possible. But what I'm looking at is it going up to 180. So I'm calling this out yesterday. So I'm calling this out yesterday night and this morning to accumulate GME. Now I'll be able to zoom up a little bit, and then I'm going to show you one more thing. Okay, so if I go to the daily chart, you'll really be able to see what I'm talking about with the short squeeze that was going on. Daily chart. Okay, so before we had today's bar, look like that. And this is the short squeeze indicator, which basically shows you the fact that it's wedging and short squeezing, okay? And it was getting to the point where it's going to boom, explode. And I predicted that today GME would explode. However, that it could be tomorrow or Monday or Tuesday. You know, sometimes you can't be perfect. But I had a feeling it would be today. So we got into GME on that basis. And at 120s, in the 120s, it even pulled back to like 118, 117. It is a kind of ABCD for us. Yes, it is. Now, if we take a look at GME on the close by scale, so maybe the 2-minute chart. You can see what happened. So it was just wiggling around all day at, I think I have to do this, and that seemed to be what kicked it in last time. Did it work? It worked. All right, we figured out the glitch in the system here. Yes, nice. And if I zoom out, we can probably see the whole day and how that kind of worked out. So right here, you're kind of seeing the, it doesn't seem like it because it's so macro view, but you're seeing like the tip of the needle. So when we were really zoomed out a minute ago, and I was showing you that wedge, like right here, this is the tip of the needle. I'm showing it with my fingers on the TikTok. Let me show you what I mean with by drawing it. So like coming from way over here, you know, this is, wow, you're going to really do that to me right now, you bastard. What are you doing, man? There you go. Okay. This is the tip of the needle that I'm talking about. So it really got to this point where it just had nowhere to go, but down or up. It could have went down. But we already know that there's short interest on GameStop, and it has a low float, and it has a ton of demand, and it's a story stock, and you know, meme stock, and it's all in the news, and so it is likely to pop from there. So now, if we were to pull out, and it did, so we got it, and it went up to about 150. But in my opinion, the move's not over. We're still going to start to see it heat up now. If you zoom out like I had it before, but I'm not going to do it, but if you zoom out like I had it before, we'll be looking at 180, 190, and 200 for our price targets. We got to be in at 120, you know. Some of you may, you know, maybe you didn't have faith in me, whatnot, and all of a sudden GME starts cracking. It's going up into the 130s, and you're like, oh my God, I should have listened. I get in now. And that's a problem because now your risk reward is all messed up. Because if this trade were to go against you, you're going to lose a lot of money. And if it were to go in your direction, you're not going to make as much as we are because we got in the 120s, you see. So that's why you got to play these right. And for us, if the price comes back to, you know, to our entry, we'll just cut it. We'll probably cut it at break even since the move did happen. We were going to accumulate if it went lower. But if it does hit that 190, we're going to get that nice 10-to-1 risk reward ratio on our money. Yes, it was. So today was just an amazing day for us. I mean, the market was, you know, all over the map. We predicted energy. We made money on energy. We got UWMC, momentum breakout trade at the open because, you know, it didn't even look like there was going to be any momentum trades, but we pulled up, you know, the top 10 or so, and they all failed. But UWMC, we caught it instantly, and we made 10% all account on that. That was really awesome. And then we got FANG and CPE in the energy. And then we got SPY puts coming down. And then we have been planting seeds in GME. Also, we played the Burlington, BURL ABCD pattern on Burlington today. We had an ABCD pattern happen on that. Let's see if there's, I don't know what's wrong with my screen system here. I think by changing the size, it makes it better. Burl and MRO. Well, yeah, I mean, we played all the energy stocks. It did, you know, you could have picked it depending on what flavor you wanted to pick. So the ABCD pattern here on Burlington. There we go. Nice. Boy, this thing is behaving now. I bet it's going to pop and be weird in a second. The ABCD is A, B. So now you have your B level. C. And then waiting for the breakout. And then what you hope on the breakout for is a return to A and beyond, up and to D. Didn't happen. We got 1 point of gain out of it, and then it just crapped out on us. So didn't happen, but that was an ABCD pattern also that we were going for. And that can happen, and when it does, it's very fruitful because you're usually getting in down here with your risk ratio. There we go. So you're usually getting in at these really great prices where you're going to stop out if it falls down below here. So you're only going to lose like this tiny little bit of money if you're wrong. But if you're right, you get to sit on a ton of upside. Is it going to draw the line? There we go. My computer, I'm going to have to restart it. All right, so yeah, GME. Thanks for sharing. Diego, thank you very much. Oh, anyway, I do. Yeah, if you want, use the question and answer things there. Should I sell my ARC F call contract? It expires 2023. No, I think long-term financials are great. Today they got hit, and I didn't want anyone who was not super long on ARCF to hold. So I gave the alert, if you're short term, if you're just swinging ARCF, get rid of it. But if you've got it in your savings account, if you're intending to hold it for over a year, don't do that. Yeah, Faraz. Our price target is 180. All right. So what do you think that says about what I think? I mean, yeah, I think it's right now it just had the, it's just zigzagging. It's like you're looking at it on a smaller scale, but GME is going to 250. It could be. If it doesn't, we get out. We don't lose any money because we got in at a good place. You might be sweating bullets because you're gambling on all your out of money lottery tickets and everything. Well, that's your choice. We play much safer in my group. Robinhood placed a 3-day trade a week, thing on you. Yep, I'm sure it did. All right. What do you guys want to look at? I mean, Jesus, you probably had a shitload of comments here. Let me take a look. Sakari, are you even still here? No, Sakari's not here. Okay, good. Well, that eliminates his question. When will investors roll back into tech? So kind of like when this rotation's over, and it's going to have aftershocks too. This rotation that's happening is going to have its own conflict as it evolves, right? But it's a shakedown. It's like the first, earthquake is always the biggest, right? And then it's like has to settle in, right? That's settling in with the new tectonic plates, like, right? But then it has to go, and then, so we have this settling in that's going to go on over the next few weeks, maybe, a few weeks, but it could have some aftershocks that are a month or 2 or 3 from now as well, that are smaller. You might not even notice them, but maybe we'll be able to be tuned into it. We'll see. All right. I'm at a gas station right now. There's a sign in the window that says "Buy Bitcoin here." Wow, that's amazing, because we were talking about the gas prices and going crypto and right. Hilarious. What else are you guys saying here? Evan, a ticker. Can I invest in Evan? Is Evan a ticker? Thanks, John. Corn. Yes. I got just turned 18. All right. Well, private message me, Jared, if you're still in here. I hope you heard me. Yeah, Jared. No, Oglesby. No, he's not here anymore. All right, fuck him. Somebody almost got some good advice, but nope. My granddad used to save cereal boxes to burn for heat. He was born in 1905. Wow. Does that put some perspective on this? Holy Toledo. When the electricity went out here in Texas, and we had this deep freeze, we weren't prepared for it, because it's unusual for Texas. So obviously up in Michigan, it was no problem. But down here, not really prepared for, it got to negative 20 wind chill, but about 1 degree Fahrenheit, and the power went out. And so there was 67 hours without power. Well, the houses got so cold that pipes burst and ruined the houses, et cetera, et cetera. But if you were living there and you wanted to stay warm, there were some people, because they just didn't have the setup, whatever, couldn't, go get the firewood, whatever it was. There were some people that chopped up the furniture in their house, put in the fireplace to stay warm for those 1 or 2 days while they were waiting for the electricity to come back on. That just happened. So like, I actually feel like that story, like what you just said, that your grandpa saved cereal boxes to throw them in the fire. I mean, we're in a different kind of crisis coming up. That's a different kind of crisis, but it's kind of the same thing. It just kind of shows, how important it's going to be scrappy and resourceful during these very difficult times ahead. And and does it make sense now to you that the best place to put your money is banks? Like, let them make money with your money right now, and that's where it's going to be. You wouldn't give it to Apple because if people like can't even get a job that pays enough to put wood in their fireplace, they have to throw cereal boxes in their fireplace to keep warm. You know what I'm saying? And this is a repeating pattern every 80 years. So 2060 is not looking good. Hopefully it'll be a lot better on Mars. All right. I'm still reading through your comments. Thank you for the comments, everybody. SeaWorld, what did that have to do with anything? And I mean, who knows? Maybe it turns around tomorrow, but I don't think we're looking at a healthy market. Unhealthy market's unpredictable, especially if you're new. Well, I mean, this rotation, it is healthy because what are people rotating for? What's the purpose of doing it, right? Why are people rotating out of crap that's no longer going to make money and into stuff that is going to make money? So they're successful in life. So they're healthy. So this is a healthy action in the market. This is healthy. It's just that you need to be faster to adapt. Otherwise, you're going to feel like you're getting put into a homeless shelter with what's going on, and it's going to make you unhealthy. So the faster you react, the faster you win in life. If I learned anything from this channel, though, it's Crocs will never go down. I love that. Oh, God. Good old Crocs. We have to take a look at it. Has it suffered the last 2 days? Oh, that's Burl. I thought Mother of Jesus, it jumped up. Let's take a look at Crocs. Yeah, Crocs is not hit as hard as everyone else, is it? It's not doing so bad. Nobody got crushed by Crocs the last 2 days. It's still in a similar uptrend that it's been in. Maybe that'll change. We'll see how it goes. But I mean, it doesn't get much more consumer staple than freaking rubber shoes. I mean, except for maybe slipping toilet paper rolls on your feet. So yeah, Crocs probably will do just fine. And that's what you have to do. You have to figure this out now. Okay, what's going to do good in tough times? And especially in times where interest rates are going to be going up. Maserati Malls for real estate. Energy sector been up 2 days in a row. Energy is where it's at right now, man. And it looks like insurance and a bit of healthcare. Like it's just up and up and up. That's the rotation going in there. Yeah, Aaron Marati. I don't know if you're still here. No, he's not. Okay, fuck him. No, just kidding. But he asked kind of a good question. He says, yesterday you mentioned getting into companies that provide something that a company needs. And by that something, I was talking about innovatively provides, either on the commodity side, though, which doesn't need to be innovatively provided, except for perhaps how you mine it. Like, for instance, let's say lithium, right, for EVs, or a service that provides a ton of value for these industrial companies. So yeah, suppliers, B2B suppliers for industrial companies. So all those businesses that I just mentioned, insurance companies, industrial, energy, et cetera, everybody that feeds those also, yes, again, those are companies to invest in as well. So this is like, you're going to enter in an era of due diligence. Like the next year or two of investing for you is going to have to be pretty smart. You're going to have, it's not going to be like before, like, I don't know, whatever went on a huge run, Palantir or something. It may not be like that. Crypto is going to continue to do what crypto does. Did I get my mom out of Apple? Is this Biden's fault? I was telling a buddy about the spy plays. He was in amazement. Right on for us. Live streams, the VIP chat, alerts, and our course. are only available publicly on Wednesdays. If you want to join our live stream, which is live right now until end of day, you can start a free trial. Here's the link. All right. Thanks for reposting that, Jackson. How far do you think SPY is going to drop before we go back to an uptrend overall? Well, if you look at energy, it's in an uptrend. Here, let's take a look at energy, XLE. And that's the energy sector. Here it comes. Okay. Energy is not dropping. So this is kind of what I'm got to get into your guys' heads, is that you need to start to change. You need to start to change your thinking, because the market isn't going down. Just the shit you're in is, because everything's changing. So you need to change. Energy, financial, insurance, commodities, real estate, consumer staples, industrials, aerospace, all those industries are going to do just fine, and the other ones are going to suffer. So don't ask how far is it going to go before we're back in an uptrend. It's already in an uptrend if you're in the right industries, okay? And SPY, or the market, the indexes that show you that we're in an uptrend, they change. Every couple weeks, every couple months, they take a company off of the S&P and they put the other one that's doing better now on it. That's why SPY always goes up, and why it's good to invest in just SPY or index funds like that, because they're always comprised of the winning companies. And that anyway is going to take time on SPY for them to actually trigger the, okay, we got to cut you out of our index. All right, we got to cut you out. Hey, we're going to add you over there, ExxonMobil, you're back on. Apple, you're out, you know, this or that. The SPY itself is going to shift. And then you're going to think, oh, we're not going down anymore. The market's going up. But that was just, you got fooled. You know, it was a rotation, and it was a rebalancing that happened over the course of like a year. You could have already been on the train starting 6 days ago. The train has taken off. It's left, and it's energy, and it's banks and lending and credit, et cetera, et cetera. All right, good question, good question. That's XLE, that's energy. And if you think that's high, where do you see it in 10 years? CBAC, energy, yes. All right, we're at the end of our show, I think. Let me see if we have any good final questions here. I'll take a look also on the TikTok. Palantir best entry point? No, don't enter that. No. What if the Fed does Operation Twist indefinitely? They're not going to. It's just not possible, because inflation's already happening without their help. And in fact, that was what scared the market today, is Powell basically said he's not going to do anything about it. In other words, he's acting almost blind. He says it's going to work itself out. The experts kind of know otherwise. And he is an expert, but the thing is, we all kind of weigh in on it together. And as you can see, as a market, we disagree. So people are worried, and they can see, what do they say? They can see the writing on the wall. He's only going to be able to say that for so long, for maybe 9 more months. You will see when the Fed raises interest rates for the first time. You can, I don't know, send me a message and go, wow. Or, I can't believe what the future holds. Is everything really going to come true? Yes, everything's going to come true. Gas is going to be $12. Sounds so weird. $12 a gallon, but you're going to make more, because minimum wage is going to go up. The cost of living, all the cost of living is going to go up. It's just, the whole thing just is going to be ridiculous. Burning furniture. Yep. Crocs is goated. My brother decks his Crocs out in Pokemon pins. That's cool. I like that. That's cute. Send me a photo of that for us. That's cute. We're gonna put it in the group. because we are talking about Crocs is like the poster child of what we invest in. Let's pull up the poster of Crocs right now. Poster child. Here we go. Gorgeous, gorgeous uptrend. A textbook, excellent uptrend chart. 3 docs, you know it's true. Can we, what's that? So you know it's true. Would banks not be a bad idea, especially if people might start defaulting? Well, yeah. All right, cool. And also probably those companies that lend to, like, you know, the businesses, you know, to bail them out of tough times, because they're going to want that one last loan while businesses go into duress, like, you know, Norwegian or something. They're going to want that, you know, extra, what is it they need? $1.3 billion loan in like a year and a half from now. And so who's going to give it to them? You know, find out. That's the company you want to invest in. You don't want to invest in the distressed company that needs a loan during inflationary times. Dude, companies that are all cash right now with no debt, oh, those are good. Those are good. Go research tonight and over the weekend. This is our last class tonight for the week. Try to find companies that are all cash with no debt. Like, dude, those are going to be golden. Maybe they're not, you know, super growth like Apple, right? Like everything's been going. But they're going to be what's winning in the future. All right, you guys, have a good night and a great weekend. But I will see you tomorrow, Friday morning, and we'll trade. But this is the last class of the week, because Friday night there's no market Saturday. And Sunday is fucking Sunday. So I'm not going to teach then. So I'll see you for class again Monday night. But I will see you guys in my group, and anyone who wants to join right now, click the link in my bio. Come on in and let's trade tomorrow morning. Let's go for it. See ya, motherfucker. All right, Ryan. Good night, guys.